Again, my name is Dale Brethauer. Today I'm going to be talking about a high probability trades with weekly option spreads. And these are vertical spreads I'm talking about. They're credit spreads. We're looking at putting on bull puts or bear calls. I'm not going to be going into the details of what they are. However, there's a lot of information available through many sources on vertical spreads. There's two programs that we teach. The one I'm going to be talking about today is it focuses on the SPX, which is the Standard & Poor 500, and we call it SPX War, which is a weekly options regression. We're using the regression channel to tell us when to get in and get out of trades. I'm going to be showing you some examples of trades today. I'm going to be talking about why we're using the SPX, and towards the end I'm going to be showing you how you can become a free member to our website and learn more about me and learn more about what we do and how we teach, and give you an opportunity to join us in the two programs that we have. The first one is the SPX War, and the second one is called Options Pro. They're similar in that we're dealing with vertical credit spreads. With Options Pro, we're looking at a little bit longer time period. With SPX War, we're looking on the 15-minute chart, and therein lies the difference between the two. We believe that credit spreads are the way to make money in the market on a consistent basis, and that's what we teach. Webinar outline, we're going to take an honest look at why most traders lose, and most traders do lose, and how to flip the script. We're going to talk about market manipulation. A lot of traders lose. Well, I think the three top reasons are: one, they overtrade their account. They have poor entry and poor exit techniques. It's just about as easy as that. I'm going to be talking about how to learn a high probability short-term income generating trading technique that you can use right away on both large and small starter accounts. And then how to apply these techniques while leveraging with weekly options, specifically the SPX, which is the Standard & Poor 500. That's the big boy. The SPY, of course, is the ETF. Now, Renee talked a little bit about what I do and what I've done. I'm currently the founder and head trader for optionsinfinity.com, www.optionsinfinity.com. I believe this is the very best educational website for stock market trading available today. Again, the two programs that we teach are both credit spread based, the SPX War and Options Pro. Now, I've been a trader for 35 plus years. I manage a hedge fund. I do this for a living. I actively trade the stock market. I'm not a teacher who doesn't do. I'm a doer that is getting to the point in my career where I love to teach. I love to teach. I have a passion for helping people learn how to be a success in the stock market, which is a very, very difficult task. Very difficult task. You have to keep your ego in check. You have to have a rock solid strategy. You have to keep it simple, and you just have to keep doing it. And that's what I teach, and I keep the programs available to a minimum. I keep our portfolios to a minimum. Everything's based on keeping it simple. I'm going to start out by giving you an example. This is an example of a trade we made on the SPX, and what we're looking at is the 10-day, 15-minute chart. And this is a chart right from my Thinkorswim platform. We're not associated with Thinkorswim, but I believe it's an extremely good trading platform, not only for all the charting tools, but for the good fills and good commissions. This was a trade we put on April 12th of last year, right down here. We bought the, back then they called it the 4th week April weeklies. Nowadays, they've got so many weeklies. They've got ones on Monday that expire Monday, expire Wednesday, expire Friday, and they always give you the date that it expires. Back then, they only had one a week, and they expired on Friday. And this was the April 4th, the 4th week in April. What we did is we set up a bull put spread, and there what we sold is the 2040 and bought the 2045. Okay, the 2040. Excuse me. We sold the 2045 and bought the 2040 for protection. Now, with that, we got a $2.50 credit. And that's kind of nice because we use the 5-point spread here, okay, from 245 to 240. So the max you can lose there is $5 minus the credit. So the max you can lose, this is a 1-to-1 trade. This is a 1-to-1 trade. The risk and reward is 1-to-1. Now, if we can put on some trading styles and use some indicators and get that percentage above 50%, you have a positive expectation trade. Now it's just a matter of executing the trades. We got out of this trade 2.5 days later. 2.5 days later, when the debit was only 40 cents, it had gone from 250 down to 40 cents, and that's an 85% profit. And that's basically what we're doing here in this program. What I do is I send out text and email alerts when I see this, and text and email alerts when I see it's time to get out. Okay. Renee talked about Dr. Van Tharp. I don't know if any of you know him. It's well worth getting his book, Trade Your Way to Financial Freedom, which you can get on Amazon.com. He is a psychologist that works with traders and investors. Tremendous guy, and basically what he teaches is pretty simple. You got to check your ego at the door. My background as a mechanical engineer made it so that I was used to the laws of physics, and you worked out equations, and the answer was the answer, and it didn't deviate. Well, that's not the way the stock market works. A lot of analytical minded people gravitate to the stock market and get killed because and I had some bad trades early on in my career too, because after my analysis, how dare the market go against me? Well, it does, and you have to be prepared to exit. Dr. Van Tharp he taught me that. He taught me money management techniques. He taught me how to develop a rock solid strategy. Some of the things in the book he talks about is financial freedom is really a new way of thinking about money. Most people, they think they win the money game by having the most money and the most toys. What I would ask you all to do is do some soul searching and ask yourself, why are you trading the stock market? What is your goal? What are you trying to do? You have to have a clear and concise reason to be in here doing this. And you have to develop a goal that's realistic, and you can get to that goal. But if you're just, pick up a Wall Street Journal and say, well, I could have bought here on this ascending triangle and it would have just gone up. No, that's not the way the market works. It's not the way the market works. You have to be willing to accept losses. You have to be willing to get out of a trade that doesn't work with you, and you have to be willing to you're not going to make $1 million overnight. You pick up the Wall Street Journal, like I was saying, and you look at a chart. You say, I would have done this, but we don't trade on the center of the chart. We trade on the right hand side. We don't know what tomorrow is going to bring. Dr. Brethauer goes on to say, financial freedom means that your money is working for you. Your money is working for you. It can effectively replace your need for a 9-to-5 job. It doesn't mean you won't spend hundreds or even thousands of hours building the foundation for your financial freedom. Are you willing to do that? Think about any professional. They have spent, think about Jordan Spieth, just won the Open Championship. He has hit thousands and thousands and thousands of golf balls till it makes it's effortless. He just does it. And that's what you're going to have to do. If you want to really be serious about this, you have to put the time in to develop your strategy, and that's gonna mean you're gonna go through some losing streaks. You're gonna have to modify it. You're gonna have to spend the time, but you will get there. Financial freedom is possible once you've laid the right foundation. Okay, let's get back to our weeklies. Your best path. I believe they are the best path. Futures market, you can get quick profits because of the large leverage, but statistics say that 99% of all retail accounts not only lose money, but lose their whole account trading futures and Forex. It looks so attractive, but it is so risky. You can set up an account with 95% leverage, but if it goes against you, whoops, you're in trouble in a hurry. So let's scratch out futures. Stocks. Stocks are good for extremely large accounts where you're fine compounding wealth at a small percent per year, and it can happen. You can also sell monthly options, and that's good for all size accounts that target about 20% per year. Okay, these two I think are grinders. They're grinders. Weekly options are good for both small and large accounts looking to make sizable, consistent income. And I think that's where the majority of you fit. You're looking for something. You might not have a huge account. You're looking for something that's going to give you consistent income of a sizable nature. That's what you can get with weekly options. Weekly options, especially, they're rigged. They're rigged with explosive gamma and high premiums. This is by design. There are some professionals who make money buying options. It's extremely difficult to do. The best thing to do is to sell options. I teach you how to join the market makers. Market makers profit this money by taking it right out of your account during rapid price movement at key strike prices. I'm going to teach you how to join the market makers by selling options on indices. By selling options, the hyper fast time decay of premium works in your favor. But we're never going to sell naked. We're always going to have protection. And you can actually make just about the same percent return, if not better, by going in with a vertical spread versus selling naked. You look at the premiums and you say, boy, if I just sold that, I'd capture all those premiums. TJ says, what about the future options on the previous chart? Well, future options are just as deadly as futures. I would stay away from them. Definitely stay away from them. Unless you've got a lot of time, you can spend most of the day watching it, and you've got a sizable account that you don't care if you lose it all, because the good possibility is, statistically says you are going to. It's a very, very difficult game, TJ. Very difficult game. By selling options, the hyperfast time decay of premiums works in your favor. And here's what I'm talking about. This is the premium that you'll pay for an option on the y-axis, and this is the days till expiration. Now, notice as we get in the last 30 days, this drop off of the premiums becomes exponential. And what we're going to do is we're going to work in this realm here, about 10 days till expiration. And we're going to go ahead and put on a bull put or a bear call. And that time decay is going to be in our favor. We're going to be like the market makers. We're going to be the house. We're not going to be the gamblers that come in and put it on red or black or play games of chance. We're going to be the house. We're going to sell options to people that want to take the risk and buy them. Greg says, do you offer any kind of trial period? I like what I hear. Greg, I'm going to show you towards the tail end of my presentation how to get onto the website and become a free member and learn more about this. Learn more about this, so that by the time you sign up for one of the 2 programs available, you've got pretty good confidence in who I am, what I do, and what the programs are like. Traders are lured into buying cheap weekly options, and that's exactly what the market makers who sell them want you to do. You're about to learn the strategies that not only allow you to sell weekly options with protection, but do it in times when probability is in your favor. I believe the SPX, the Standard & Poor, is the best of the ETFs to do this. Why? Because over 1/3 of all SPX volume is now in weeklies, creating a fantastic opportunity. The liquidity is exceptional. You're going to have tight bid-ask spreads. You're going to be able to get in with maybe a penny or two paid by slippage, okay? The large funds and institutions use the SPX to hedge their portfolios. Again, this points towards this liquidity. Now, the SPX is priced in for about a 1% move, but it doesn't move that much. Very seldom does it move that much. Because of this fact, a plus or minus 1 standard deviation is usually about 65%. With trading the SPX, you're closer to 85%. It becomes more and more attractive all the time. Here's a chart of standard deviation. Let's say this is the current price of the SPX. Well, it's got 68.2% chance of being within -1 or +1 standard deviation. 95% within +2 or -2 on the standard deviation, and that's the tool that I use to really zero in on when a trade needs to be made. Now, a lot of Wall Street jargon makes the strategy appear complicated, and they are not. These strategies are not complicated. They make them sound complicated. I'm gonna take all the complication out of it and teach you everything you need to know. You don't know, if you don't know anything about options, you can do these strategies. I can walk you through everything you need to know. You don't have to watch the market all day. I'm going to be sending you text and email alerts when there's action to be taken. I want you to learn. I want you to learn how to do these. I have nightly blogs that it's a video blog that I do explaining what happened during the day and why, whether we're in or out and why we are. So that's a teaching tool. We get together once a month for a Q&A session. That's a teaching tool. We're all about, you can follow us or do it yourself. Now, I'm not a registered investment advisor, and I'm not a brokerage firm. So I can't, when I send out a text and email alert, it's basically what I am doing. Now, it's up to you to decide and look at the chart and say, okay, Dale's saying he's doing this. I see what, oh, okay, I see what he's doing. All right, I am going to pull the trigger on this and do this, okay? Well, I can't get the same price he was talking about. That's okay. It's up to, you have to pull the trigger at the time that you want to do it. It's totally up to you. Okay, this is a perfect trading strategy for newer traders with small accounts that are looking to grow them quickly. But the strategy is not limited to the small accounts. These strategies are safe. There's no naked selling. There's no random assignment of the stock. And this is what we do. This is what we do. 2 steps. Step 1, we place a directional vertical spread trade when the SPX is overbought or oversold. Step 2, we exit a profitable trade on a Fibonacci extension. Or if it goes against this and makes a measured move against this, we exit and take a loss. 2 steps, okay? Very simple, very simple. Okay, let's look at a recent trade example. On Tuesday, July 11th, the market was, this is the longer term chart. It's the 90-day 1 hour. And yes, I will go over some trade results records towards the, as a matter of fact, I think I'm getting to it in the next couple charts. I will do that. This is the 90-day 1 hour chart. This is the 10-day 15-minute chart. This is my grounding chart, if you will. And you can see that the market had basically a triple bottom that wasn't confirmed till it came up here. But this was a lot of support down here, a lot of support. And it was below the regression line. The regression line is calculated by 50% of the price being above, 50% being below. So this is a great trend line, if you will. Now, we had talked about statistics earlier. This is the +1, the -1, standard deviation. This is the +2, -2, standard deviation. You can see it doesn't deviate very often from the +1, -1. Yeah, occasionally it will. That's an outlier, and that's an opportunity. But if you think of this regression line, the black line being a very strong magnet. And this actually works opposite of gravity, because the further something gets away from that magnet, the harder it pulls it back. So this is an outlier. Remember that a lot of big institutions, they're trading this, and it doesn't deviate very much from the norm. The norm being this regression line. When it does deviate from the norm, it'll snap back, and sometimes it'll overshoot and then come back, and then come back down, snap back, and we can take advantage of these snapbacks. Now, we're not right all the time. There is no strategy out there that's right all the time. However, when we are wrong and we have a measured move, let's say we got in down here, and all of a sudden it came up a little bit and then came back down. That would be a major move to the downside, and that's a continuation of a downtrend. We're out. We're out. Okay, so we're looking at this time period here, and we say, well, I'm looking for an opportunity to get into this trade, and now I turn my attention to the 10-day, 15-minute chart, and here we are down here, and that was Tuesday, July 11th. What we did is we sold a 21 July 2400 put and bought the 24. It's a bear call. We sold the 2405 put and bought the 2400 put for protection. We got $1 credit. Now we're looking at the Fibonacci's, and I'll explain the Fibonacci's in very great detail. I've been using the Fibonacci's for many years. These two tools that I use, the regression channel and the Fibonacci's, are two tools that I've been using for a long time, and it's the crux of what I do, and they are very accurate. It's I mean, the Fibonacci ratio is seen throughout nature. It's the way plants grow and leaves on the stem. The human bones, the forearm to your hand is based you can get the golden ratio, the Fibonacci ratio. Basically will tell you what your hand ought to be if you have a certain length forearm. And so if the Fibonacci's are seen throughout nature, doesn't it make sense that they would work in the stock market? Because the stock market is fueled by human nature. It's fueled by human nature. We got in down here, 1, 2, 3, 4, 5 days later, it hit the way overextended 261.8 on the Fibonacci's. Out we went, 95% return, 5 days. Okay. Happens all the time. These trades happen all the time. Now, this is an eye chart, and I don't expect you to spend a lot of time on this eye chart, but basically what I wanted to show you, and this is the track record since I brought this to the public in last July. Up until that point, I had researched it. Then I spent 2 years paper trading it and then using my own money to trade it to prove it out. I began teaching some of my mentees this, and then it became publicly available last year. So we've been doing this for 1 year. You can see these are all bull puts, bear calls. Okay, and the results the first year is we've had a return of 652%. 652%, yeah. 69% winners on an average investment per contract of about $159. Now, you can take it from there. If you want to invest 4 contracts, that's $4,000 profit. 40 contracts, that's $41,000 profit. This is a strategy that Okay, loser, loser, winner, 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 loser, 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 winner, loser, winner, winner. Okay, you can see this strategy is a high probability of success, but it does have some losing streaks, so you don't want to overtrade. But it is a rock solid strategy. This is the last 21 months. Based on $1,000 per trade, it has returned 25x. Not 25%, 25x. And look at that equity curve. It has very few drawdowns. And that's what you want in an equity curve. Let me just go over a couple what my members say, not to brag, but basically to make a couple points. One thing is that I think speaks volumes is 42% of our membership base has been with us for over 3 years. Now, I teach you how to do it, and I want you to become proficient at doing it. But I think a lot of people stay with me because they want to hear my confirmation, I think. And that's why we have a lot of longevity. But I think it also speaks to the fact that we work diligently with our members to give them everything we've got as far as learning something, teaching them. Here's a couple things in the points I want to make. Jim F said, I paper traded and did well. And last week I sold I made my first real trade, a bull put. And according to my hand figures, I made 59%. That's fantastic, Jim. This is what really tickles me. If you want to do this for a living, take the time to learn it and apply it. If you can't make money paper trading, there's no reason you should be spending your own money. If you're making money paper trading, now you can escalate it up. Okay. Mike said, I've been making money on the SPX. I traded 1 contract, now I'm up to 10. That's the way to do it. When following your rules, I'm 5 for 5, averaging 74% per trade profit. And the last one, Pete says, I really enjoy trading the SPX. I started out paper trading in January and started trading live in March. The results have been fantastic. I've done 8 trades with 4 to 10 contracts, average gain $1.15 per contract. Been in 3 days with 100% winners. Can't get any better than that. Well, that's correct, but 100% winners, you don't want to get overconfident in the market, and because you want to stay to your money management goals and stick with it. Now, when you reach a certain plateau, you might say, okay, now I can increase my investment. But do that slowly and build up your account slowly. Okay. What I'm offering you today is for you to begin learning as a free member on my website. Okay, and then consider becoming a member in the 2 programs we have. One is the SPX Weekly Option Regression, and that's what I've been talking about today. The other is Option Pro, which is very similar, but it's more for longer term options where you look probably more like 40 days till expiration. We still take advantage of that time decay, the theta decay on our premiums. At this point in time, both these programs are sold out. But I want you to become a free member and learn more about what I do and what this, what are bull puts and what are bear calls, and learn all the reasons, how I set up my charts, learn all that stuff, become familiar with it. Go ahead and join our VIP list for the next opportunity to be a program member, and that's going to be August 20th. So you got a month to get on the website as a free member, play around, learn what you can, and make a decision. Let me go over to the website real quick here and show you. This is the home page. When you go into www.optionsinfinity.com, optionsinfinity.com, this is our home page. Start making smarter option trades. Join the community to start learning from the industry-renowned master of the credit spreads. Master of the credit spreads. All you have to do is click this button. Put in your email address and you have access, and I'll show you what you have access to in a second. Here's our two programs. I've been talking about the SPX War. Let me just show you a little bit more about it. If you click this, it'll bring you over. You can hear an interview. I think it has more credibility when you hear from somebody else how they've been doing on a program. This is about a 30-minute interview with one of our members. At some point in time, if you want to go ahead and learn, sign up. There's no obligation. Sign up for an availability on August 20th. Like I said, there's no obligations. You can do that. But if you scroll down here, you can see that the average trades per month, it's about once a week, little less than 5 days, about 67% win rate, 69, and a nice little return per trade on that. What you get is a 4-video course teaching you exactly what I do. You get a nightly session review where I talk about, and you can get this on your phone, you can get it on your tablet, you can get it on your computer, where I show you exactly what we did that day and why. You can get real-time text and email alerts when I see a signal. And once a month, you can come to the live Q&A session. Okay, so let me go back here to the home page for a second. Okay, so those are the two programs, and here's what you can start learning today as a free member. Options 101, options, the leverage of options, how I set up my charts. Now, remember, I'm setting these up on Thinkorswim, but I think most trading platforms will be similar. And I mean, you want to set up the standard deviation regression channel. I show you how to do that in Thinkorswim, but if you got a different trading platform, you just have to email them or call them and find out how they do it. Most trading platforms have this kind of stuff available. Thinkorswim is a little bit advanced. However, most of them do it. Talk about for a given portfolio size, what should be your trade size? It's very important. Like I said earlier on, one of the 3 big reasons why people lose in this endeavor in this area is that they overtrade. So I talk about how you can determine for your portfolio size what the trade size should be, a little bit more on the regression channel, psychology, the Fibonacci's and measured moves, credit spreads, weekly options, okay? This is all available to you, and here's some of the more what our members say. This is all available to you as a free member. I, offer that to you today, and then if you want to take it a little bit further, you might want to go ahead and just sign up for one of these programs. Either one of them is great. This is a more short-term program. This is a little bit longer-term program. Less trades, more trades. The results are very similar between the two. This is for the active trader. This is for the person that is not real active. But once again, they're very, very similar. Very similar. So then everybody's asking, well, how much is this? How much is this? Well, the kind of results and the returns I'm getting, it ought to be a lot. It really ought to be a lot. But there it is. It's $99. $99 for the monthly subscription. You cancel at any time. You can be in for a month. You can be, and cancel. You can be in for 3 years, like a lot of people are. You can, it's $99 a month recurring, and that's real cheap for what you're getting. Trust me. I know what my competition does out there. I know what they offer. We have a whole section here that devotes their time to looking at what the competition's doing to make sure we're ahead of the curve. Once again, what you're going to be getting is a 4-part video course, the real-time text and email alerts, the daily session review every night, once a month, a live session with me. I'm going to be doing the Q&A session. Okay. It's currently sold out, but if you know, it'll be open on August 20th. In the meantime, I'd like you to go onto our website and learn more about us and get comfortable with us. And if you like it, I hope to see you become a member. Let's see, I think that is all the questions I've got here, Renee. And I actually went a minute over, but that gives the next person 4 minutes in addition. So I'm done.